I just don't think that there's any other way to build something big without having some of those qualities of hustle that I just mentioned. There's actually, our name is really controversial. When we first came out into the market 6 years ago and introduced ourselves as Hustle Fund, there's some very bad connotations with Hustle Fund, or with hustle, I should say. Our view was just like, we don't actually believe in any of those old definitions of hustle. We want to reinvent it towards something much more positive, which is, it's not about working yourself to death. It's not about definitely not doing anything criminal or illegal, because that's not our business. It's more about just being really, really creative and oriented towards results. It's very easy when you're a founder talking to VC, feeling like, oh my gosh, like I gotta be really careful with this relationship and talking a certain way. I want to sort of just put all that aside. Once you get your first few investors in, what you do is you need to ask them for investor referrals. And I have a specific way of doing this. You don't say like, hey, I'm Advik, like send my blurb or my deck to anyone. You instead say like,
Hey Eric, how are you? Hope you're doing well.
yes, very good. I'm really excited to be on the show with you, Advik. We're gonna have a good discussion today.
Oh yeah, definitely. Awesome. So I'll get right to it. Get right into it. The name Hustle Fund. What does it all about? What is hustle?
Yeah, great. So yeah, Hustle Fund is an early stage venture capital firm based in the San Francisco Bay Area, but we're a global team. We have teams all across North America, a lot in Singapore, a team of about 30 people actually. And our thesis is really simple within our fund. We think that hustle is the very best leading indicator of success that you can find in teams, even at the earliest stages when companies are forming. So hustle for us means great execution, means meets high velocity. So it means, being really creative, putting in, making a lot of throughput and output for the time that you choose to work, being really experimental, being oriented towards measurement. We find that these are the qualities that the very best founders that we've ever supported exhibit these characteristics of hustle. So more than anything else, too, we think that this is the leading indicator, even more important than where you went to college, whether you grew up wealthy or not, whether you worked at a top tech company or not. Those are all interesting indicators, but we think that hustle is the most important one, actually. So we decided to name our fund behind that.
Why should people really hustle at the end of the day?
Yeah. I just don't think that there's any other way to build something big without having some of those qualities of hustle that I just mentioned. There's actually, our name is really controversial. When we first came out into the market 6 years ago and introduced ourselves as Hustle Fund, there's some very bad connotations with Hustle Fund, or with hustle, I should say. The first was hustling in the American context can also mean like criminal behavior, like you're hustling drugs on like a street corner or things like that. That's actually a very old kind of connotation. There's this notion of hustle porn, and it's not pornography, but it's just this idea that, we should glorify people working themselves to death, like 24 hours, 7 days a week. And our view was just like, we don't actually believe in any of those old definitions of hustle. We want to reinvent it towards something much more positive, which is, it's not about working yourself to death. It's not about definitely not doing anything criminal or illegal, because that's not our business. It's more about just being really, really creative and oriented towards results. And I actually think that's been something I've seen in my life, in my career, that's worked really well, which is you got to work hard, but it's not about working a lot of hours. It's just working really, really intelligently and intentionally too. And that's hard. You don't really find that in a lot of people, but for those who do understand that and try to put those principles to work, they tend to just do really well in life, just not even just their business, but in life in general. It's a really fast way of growing yourself. So yeah, those are some thoughts on that.
Yeah, that's interesting. How should a person really hustle intelligently?
I think there's a few things. One is have a perspective of growth mindset versus fixed mindset. So there is a pretty famous, I think she's a psychologist or maybe sort of an anthropologist named Carol Dweck. She wrote a book around a growth mindset many years ago. And she kind of defined and categorized people in terms of two types. One is fixed mindset, And then the other is growth mindset. So fixed mindset is like this idea that I'm me and then the world is what it is and I can't change the world. It's just, it is what it is, right? So I tend to find that those with like a fixed mindset tend to have a little bit more of like a victim mentality. It's just like life is unfair, but I can't do anything about it. So what's the point, right? It's a little bit nihilistic. There's a fair number of those people I've worked with and I've met and I know in my life, actually. Maybe they're not as obvious as what I just said, but like, they have like this fixed mindset of just like, what's the point of even trying that thing because it's not going to work. Like that's kind of like the attitude that they have. Growth mindset is this notion that yourself as an individual, but also the environment around you is changing all the time. So it's on you to embrace that change and try to adapt. And that's actually the view that I try to adopt for myself and the types of human beings I try to surround myself with as well, which is this kind of grounded humility that what happens today with me or my world can be totally different with what happens tomorrow. And I like this because like when you're a startup founder, whether you would like to admit it or not, there are pivots along the way. They're big pivots, but there are usually more small pivots. So big pivot would be like you and I started a company trying to create a COVID vaccine, but we decided to want to create a fitness app instead. Like that's a pretty big pivot, right? But much more realistic of what I see every day is like we're creating like let me give a more realistic example, like the second, like we're creating a fitness app together. Originally, we want to start by creating an app that everyone loves, but then we like through lots of experimentation realized like actually the way that we're progressing in our development and our own passions is leading us to find experiments that show that we should be focusing on geriatric populations, maybe older populations who need really good health outcomes. So we're going to like start to experiment closer and closer to that. So that's also a different kind of example of pivots, which is just like this idea that you, through experimentation, constant learning, discover a different side of the market or a different offering that you can produce to serve, I think, the ultimate outcome of what the company is going to be shaped as. So that's actually one of the biggest questions I ask myself when I'm meeting a founder for the first time too, is just like, does this seem someone that seems to be exhibiting growth mindset versus fixed mindset? And if it's a fixed mindset individual, then that's normally someone I don't want to work with.
Why?
The reason why is it's very difficult, I think, to push people from a fixed mindset starting point into something that's more growth mindset oriented. That takes a lot of self-work in order to accept the notion that you could be wrong today, something else could be different tomorrow, and that I actually have the capacity to make changes, to change myself as well as the environment around me. That's a very, very big thing to believe. And in my experience, very few people can make that shift from fixed to growth.
Do you think you have made that shift, or have you always been with the one with the growth mindset?
It's an interesting question, Avik. So I think I did make the switch. I've never really considered that question before. I grew up in Michigan, in Detroit, and that environment was kind of difficult for a few reasons. I had a pretty good childhood there, and I generally liked Michigan, and I still do. But when I was growing up, it almost felt like there were 2 or 3 paths to being a successful person in life. One was like be a doctor, be a lawyer, maybe be an engineer, right? Go into these professions. And I'd watch all these parents around me when I was a kid who had these great jobs because I lived in a really good area of Detroit, and they hated it. I mean, like they were just like waiting to turn 65 years old so they could retire, get a cabin up north, maybe a boat for the lake, and, live their life. And they were just like humping these jobs that were super terrible. And at least my perspective, like it just never seemed like they're happy in work. And when you surround yourself with a view of just like, you gotta be either a doctor, a lawyer, or an engineer to have like this great life, and a life looks kind of terrible, it did sort of make my world seem very small. What changed me into more of a growth mindset was going to college. So I was lucky enough to leave Michigan, go to California, attend Stanford. And that environment is totally different. The moment that you enter Silicon Valley, where Stanford is squarely based, everything seems possible. Just like people's ideas turn into action. They turn into actual companies or big movements, right, from this place. A lot of like even things like civil rights have strong roots in places like Berkeley here in the in California. So that did reshape me. I think I'll put this caveat to my like previous question, like, do I believe that people can go from fixed to growth? I guess I did this in myself, but there's a big difference here, which is I was still pretty much a child when this was happening, right? I was like 18 years old when I arrived to California. So I think I had a lot more open-mindedness and malleability of my mind as a college student. I maybe a little bit too jaded right now, but I generally find that if you're like in your late 20s, your 30s, your 40s, or 50s, whatever you are, and we're engaging each other, it could be really difficult, I think, to make that switch because perspectives and principles tend to calcify the older that you get. That's a great question, though, because I've never considered that for myself. But now, I mean, now I have.
Yeah. I mean, look, you and Hustler, the reason why I can say that is because I had Michael Kim on the podcast. I don't know if you know him. He has a fund of funds, Sindana Capital, I think.
Oh, Michael Kim?
Yeah. Yep.
Yeah. He's amazing.
Recently had him on the podcast. I asked him a question. Is it harder to raise a VC fund or raise money for a startup? He said that it is much harder to raise a VC fund, and he said that only people who can hustle can only raise VC funds. And I immediately thought of you. So,
that's interesting because I disagree with that statement. I have a lot of respect for Michael. I actually think that he is a real pioneer. He kind of invented this whole practice of fund of funds, taking risks on pre-seed and very small funds. And that was a really risky bet that he took when he started Sindana. And that team is fantastic. Graham, like everyone I meet there is just wonderful human beings too. But having been a founder for many years, 15 years prior to being a venture capitalist, I actually think it's so much harder. All around, like 10 times harder to be a founder than it is to be a VC. I just, with a venture capital firm, like, our product is actually already has product market fit. It's giving money away, like to founders. So like, there's a distinction between like, if you're a good investor, like you could be, and hopefully putting this money and giving it to like good founders who's going to turn that into more money. But like the idea that like the product that we're selling just fundamentally is already proven to have product market fit. Like we raise capital and then we give it to founders who want the money and then they take it, right? So like that's part one. And then part two is just like, where it gets kind of difficult as a VC might be the fundraising side of it. But even then, a lot of people are willing to take risks on someone that they perceive to be pretty smart and are fairly patient because the results don't really come in until year 10. So if you're decent in terms of your storytelling and you have like a strategy that's compelling and some good answers to some hard questions, you can pull that off. As a founder raising capital, or just a founder in general, almost all of you're risking almost everything in your life, your wealth, your health, behind just like a single business. As a VC, like it's psychologically a little bit better because you have a portfolio. So like if founder Eric doesn't work out, it's okay because founder Advik's doing so good that like we just need him to do well, right? That's a very like callous way of thinking about it, but it's real in the sense that like emotionally it's a little bit easier to manage a portfolio. When you're a founder though, it's just one thing, right? It's like the company that you have right in front of you, and that company could die at any moment, and then everything is lost. So the pressure I think is far higher, and also I just tend to find that my investors in VC tend to be pretty polite. So like, even when they say no, they don't really do it in a way which is like, no, this is never going to work. Because like, a fund can last for a long time and prove people wrong over time. And I've brought people who said no to me back into saying yes over the last 6 years. As a founder though, the level of etiquette and rudeness is like next level bad. Right? Just like people will just ghost you. They're going to say mean things or sexist things or racist things and feel like they can get away with it. So anyway, that's a bit of a longer rant to not even a question that you're about to pose, but I wanted to highlight that because like, I'm sure there's a lot of founders who are listening to this podcast, this video even. And I want to just say that like, I see you. Like it is not easy to be in your side of the table. And I just think that my truth is that being a VC is always going to be the easier job compared to what you're doing, founder.
Yeah. Pick you on the last one a little bit. So I started basically going into the field when I was 11. Then I started the podcast when I was 14 last year. And one of few wise people I met in the start told me that there'll be a lot of rooms in which you will not be accepted because of the age barrier. So is that the same thing that about the racial things that you're talking about in the start?
That is definitely one kind of bias as well, which is like you got this kid, Avik, he's 15 years old. Like what the hell does he have? Like what right does he have to talk to all these people? All right. Well, this is kind of where I feel like I ground myself in this notion of hustle. So at the end of the day, what I think is the output of someone that possesses great hustle is that they produce good output. So I have this like thing that in my mind, which is, again, like if a lot of people like to celebrate this notion you have to work like 80, 100-hour a week, I don't buy that at all. All that I think the right kind of measurement is not actually how much input you put in, it's actually how much output you put in. So like if you have like this kid, Advik, who's like an engineer, he's working like 4 hours a week, but he's like outperforming someone that's working like 50 hours a week on your team. We should celebrate that, right? Like that is like a brilliant person that you should try to keep forever because they're just so efficient, and actually even try to learn what they're doing. Because I would love to be in a world where like I'm only working 4 hours a week, but like producing at the level that you are, right? So I think like, what you're mentioning, Advik, too, is it's interesting because yes, there are always going to be people that are biasing on things like race, gender, or even age or geography. The fact that you're in Delhi, right? Not in San Francisco. Like those are biases, and those people I tend to find are fucking idiots because like, who cares? We're like in 2023, a 15-year-old kid in Delhi has a capacity if he wants or she wants to build, I think, a unicorn, right? Like the tools are there to make it happen. And, if there's enough motivation and hustle there, I think you're just going to pull it off. Right. And so that's more of a reflection on the person, who has that bias than you. And I think like what I would advocate for you too is just to remind you is to set aside as best as you can that imposter syndrome or those sabotaging voices. We're only a couple minutes into this interview. I'm seeing that we're 17 minutes in, and already I can tell like, wow, this guy is a really talented interviewer. You're asking really penetrating questions. You're doing like, you're making me think about things that I've not thought about before. That rarely happens in a podcast. Anyway, that's a little bit breaking the fourth wall here, but I just want to mention that like, you guys just keep doing what you're doing because it seems like you're very, very good at it.
So yeah, I'm glad. Yeah, I'm glad, Rod. I'm nowhere near brilliant. I don't know. Brilliant is subjective.
Well, you mentioned before we started recording too, like you had Harry Stebbings on. I really, really like Harry a lot. He's a buddy of mine, and I think he's a perfect kind of example of this. He's not a kid that came from like a lot of privilege or a lot of network, but he did exactly what you're doing, and I think he's got some gift for sure to be a good interviewer. I don't deny that, just like you do, but his gift is persistence. He just keeps on going, and that's his strategy more than any other growth hack. Is just like he never stops, right? And I think that like that form of his hustle of just like the discipline has paid off for him tremendously in his career. So the good news is you're starting even earlier than he is. I mean, like he didn't really begin this stuff until he was like 18 or 19. So you have like a 3-4 year head start, maybe more, on him. So, at some point you're going to be funding my fund. I'll be begging you for cash.
Oh no, I have no interest in money.
Yeah. Well, I'm not a very money-oriented person either, but I'm a very impact-oriented person, right?
Oh yeah.
And so I can tell that you're someone like that too. And money is a tool for making a lot of impact.
Definitely. We'll pivot here a little bit. I want to get into that. Do investors really hustle? Do VCs really hustle?
So do VCs actually hustle? It depends on the VC. So I think that there are two types of venture capitalists. one that are asset gatherers, and then the other that are trying to be real investors. Let me try to define what each one means. And then actually that'll help to set the context answering your question too, whether VCs hustle or not. An asset gatherer is, so taking a step back, for your audience that's not familiar, the way that venture capitalists get compensated is on management fee and carry. So management fee is typically about 2% of the total assets under management. So that means like if Advik and I decide to raise $1 billion fund, we get 2% of that guaranteed every year for 10 years. So that means that's $20 million a year, 10 million for him, 10 million for me. Guaranteed for 10 years off that one fund. Typically, you can raise more than that also, right? So you are getting $100 million for the next 10 years. I'm getting $100 million for the next 10 years, okay? Okay, so let's set that aside. That's management fee on an enormous fund. My fund, by the way, is only $46 million. So you can do the math. It's a lot less with a team of 30 that we're supporting. So then there's those that are trying to get, and then there's carry, which is this idea of profit sharing. So if Advik and I raise $1 billion, there's a concept of returning the fund, which is like we invest, let's say really well, we return the original $1 billion back to our investors. They get that just back. And anything that goes above that, this kind of profit mode beyond returning the money back is split via carry. So our investors will get 80%. And then we will get 20%. So let's say that we turn $1 billion into $2 billion. We return the first $1 billion, and then the next $1 billion, we're getting 200 million, and then our investors are getting 800 million, right? So you can imagine like with good investing, it gets enormously profitable. This is why VC can be really lucrative if you invest well. Well, if you think about it, there's actually a really the easier way of getting money is actually just having a lot of assets under management. If you and I are like dog shit investors, we're investing in the worst companies, it doesn't matter. If we have enough assets under management, we call it AUM, assets under management, then we could be the crappiest investors ever, but we're still guaranteed your $10 million salary and my $10 million salary per year, right? It's ridiculous. I tend to find asset gathering VCs are very lazy. They're the ones that are flying to Davos, taking trips to the Alpines for winter with their family. They're in Ibiza. I mean, like they're just like traveling the world, like having a great time. Sounds nice, but I don't think they're working hard enough. If you're working towards carry, it's different, right? Like the craft of learning how to invest well is not easy. Like this requires like really creative sourcing of companies, a closing process with the founders, adding value throughout the entire experience from like when you give them the money to their IPO. So like helping them to hire, serving on their boards, helping them to actually form even partnerships with other companies that may be within your network. It's exhausting, right? But I actually think that this is the true spirit of what a venture capitalist should be, is trying to fight for carry. Now you can have both. You could have like $1 billion fund and you're fighting for carry. And there's definitely some VCs out there that do that, that are legendary. I actually view that if you're an emerging manager, keeping your fund size pretty small, like we do, is a better alignment because that guarantees I can't get rich off of my management fee. I can only get rich if my founders do well, and then my investors do well, and then I will do well. Because we're actually designing our fund to be really small that fights for carry, right? That's why I'm in my garage. This is not a fake background. If anyone's watching the video, you may not see this in the podcast. I'm sorry. That's an actual garbage can right there. Those are my children's toys. There might be rodents here. Like I've been having a rodent problem, but like I love it because it's a reminder to me to actually stay hungry, hustle hard, and then actually design a fund that is actually aligned with the interests of our founders, my investors, my team, and then finally myself, right? So if you meet, this is going to sound arrogant or something like that, maybe this whole thing, but like you can sort of tell when you're talking to a VC who's really trying to focus on the craft of investing well and serving founders well and their investors too, versus those who are just like, take a look at like my 15th house or my new Ferrari or, you know, like there's plenty of VCs like that too. And it's irritating because they're in it very selfishly, I think, for themselves. And I think they're not working very hard to serve founders or their investors or their team.
Yeah. Grabbing VCs only lasts 10 plus 2 years.
Yeah. So, Yeah, but this is what I really like about our industry is that it's changing. There are a lot of new emerging managers out there. I'm sure you've spoken to a lot of them. People like Harry,
Yeah.
he's really trying hard to do the right thing. A lot of the people your guests, I'm sure, are too. Um,
Oh yeah.
but this is a job where like you could also just join like a big fund already, work your way up and then have a great life and have a mediocre portfolio, or don't serve your founders very well. Just constantly talk on like panels throughout the world, and it is a glamorous life if you choose to make it that way. Or you can work in a very cool garage like me, all the time, but really enjoy the fact that every input I'm putting in is trying to produce an output that's serving our founders and our LPs well in projects and human beings that we really believe in. And this is a project. This is a company. I've only felt this 2 times in my life as a founder. This is only a second time where I felt like every day I work on this project it means something, right? That's it.
Yeah, definitely. I mean, I've talked to a couple of investors, and I think most of them have a sense of purpose. You are, especially with the garage in the background. I'll give you that. But I will say you have the best office, in my opinion.
Yeah, if you come and visit me in California, you might change your mind once you step in here because you're like, this is like a little COVID prison or something. But no, I love it here. I mean, every single company that I've started in the last, at this point, almost 20 years, has started in a space like this. In fact, 2 companies started in this garage. So, but it's just and it's uncomfortable. It's not I have a space heater right next to me that's blasting at full blast. It's very cold. Again, I have rodent problems and things like that. But it's just a good reminder for me to stay hungry. I really am a believer that your environment kind of shapes you, right? So like if I somehow like find a way of affording like a beautiful office with like this incredible furniture and like the best espresso coffee machine in the world, like I just tend to find that it's very easy for me to think that's my new normal and accept that's my reality. When the reality is just like when I'm talking to founders like yourself and considering an investment, their space looks exactly like mine, right? And it's just this reminder of this empathy of just like the people I'm serving and talking to have environments that are as uncomfortable as mine, and that's also motivating them too to help them to like build a great future for themselves and make their companies actually successful. So I love it, and this is going to be the last place that office I ever have is actually right here.
So, man, that's incredible. I mean, yeah, any day of the time, I would prefer a garage over special office. But I think we've pivoted there a little bit. You, 3 points that you might have seen in the schedule, are all from Redwood School. So the first one, building the investor list, in the lead investor list or the lead investor list. How does the founder go about doing that?
Yeah, I think that there's a couple ways to do this. So my context is more in the North American focus because like there's some small nuances here that are very specific to North America, but I think it would apply globally too. So in the United States, to be an angel investor, and I really do think that when you get going, angels are a better source of capital than VCs. The reason why is venture capitalists tend to require a lot more time to get convinced, even though their check sizes are bigger. And, angels tend to make their decisions very quickly. It's their own money. They don't need that many meetings typically to find conviction or want to take at least a small bet, but the check sizes tend to be smaller, right? So, but I still think the angels are the right move. So if you're an angel investor in the United States, you need to be accredited, which basically means you have $1 million of assets, or some sort of high salary. There's some specific rules behind that, but the definition of an angel as a result is really broad. It doesn't necessarily mean that you're like a senior vice president at Google or Meta or any of these great companies. I mean, yeah, you can be an angel and with that profile, and they tend to be prolific. But also doctors, lawyers, dentists, people who own like trade businesses with really good cash flow, they could potentially be an angel too. So when I got going, I asked mom, dad, I asked any rich friends that I had in my life, just to like get going. Even with Hustle Fund, I mean, I talked to all of my wealthiest friends that I had. They're not like crazy wealthy, but like they contributed something, to help me get going, and that's something that I never forget. In fact, like their check, even the one that I can think of that was as little as $10,000 into Hustle Fund One. I have a buddy who did that. Means as much to me as an investor later on that put in $7 million into my fund, because I knew that they were taking a big risk. All those parties actually always take a big risk on us. So I would first begin with angels, and angels can be really broad, and you might want just look at your initial circle of people around you. The second thing too is if you have any founder friends, I think that doing a collaborative list building of investors to your friends who are also founders is really great, because when a founder refers to her investor to you, saying like, "Hey, like this is Advik, he's amazing, you should talk to him," that means a lot to a VC. In fact, I think that's one of the strongest warm introductions you can make or receive as a venture capitalist is from a founder that you've already supported, and he or she is saying like, "You should talk to my buddy who's also brilliant." Right? By far, like the highest rung of like the best warm intro. After that is like another investor saying like, "I just invested in Advik, like she's talking to." That's great too, but it's always better when it's like from a founder that you supported. So, talk to your founder friends, see if there are any recommendations there. And then hopefully that's enough for you to get some initial investment. Once you get your first few investors in, what you do is you need to ask them for investor referrals. And I have a specific way of doing this. You don't say like, "Hey, this like I'm Advik, like send my blurb or my deck to anyone." You instead say like, "Hey, Eric, you just invested in me. Thank you so much. Can you send my blurb deck to just one investor who you think would be a perfect fit for my company?" And what you'll find is that if you just ask them to send to anyone, you're not going to get a good response back, because you may not get any response because it's too much thinking. But if you say like one, it's very easy to at least think of one person. Right. And you will have a very, very high response rate. Right. And that's how we got going with Hustle Fund. This is how I did it with my old companies too, when I had no network either. It's just like, who's the one person? And you'll be surprised. It grows pretty quick.
Yeah, definitely. But you talk about choosing one person. So in the starting, you have no investor to start with, no VC to start with, no angel to start with. How do you decide? We'll leave angels aside. Angels are like people on Twitter who may invest $100, call themselves angels. So we'll leave angels aside for a minute. But how do you decide which VC to raise money from?
Yeah, that's not easy. I think a lot of it actually is very difficult to just see from public information. So I would really rely on other founder friends to say like, "Hey, you ran a process, you raised a bunch of money. Like, who are like VCs that you respect?" Right? Because typically most founders, even at the seed stage, have talked to dozens of VCs. There's also like public guides that are helpful to reputationally understand who's good or not. You can go to vcguide.co. That's a pretty good Silicon Valley public directory of anonymous feedback about VCs. And it's pretty active. So that's a good one. But there's also like better tools to just like to even understand like who's investing in what spaces, like Crunchbase or Signal or well, a lot of these other there are a lot more databases now where you can at least like define things like at least who's doing fintech, seed stage fintech, like that's starting to get easier just from public databases. But I would still rely on your founder friends, because at the end of the day, like it's not a VC fund that's investing in you; it's a human being in the VC fund. And sometimes like you'll find like an asshole Eric who works at Hustle Fund when you should be working with my other co-founder Elizabeth or Sheehan, who are wonderful, right? Hopefully no one thinks I'm an asshole, but like, that's real too. Like sometimes there's like a bad partner, and like, founders are really good about sort of like figuring out who are the good personalities too.
Yeah, definitely. But you can't really control the person that much. How do you control what type of fund to raise from? They're like the mammoths like Sequoia and A16Z versus respectfully Hassel's fund, you are a dealt micro VC fund, or relatively smaller VC fund. How do you decide
much
between
smaller.
these two?
Yeah. So, I don't know. It's very stylistic. There's a lot of emerging managers out there, just like Hustle Funds. We're tiny funds. We don't write checks the size of Sequoia. So I would say that if you're earlier on, especially, like at the seed stages, working with emerging managers can be great because usually founders don't need a lot of money at that point. They're not trying to raise like $20 million raises. That's for like Sequoia and Excel and so forth later. And there's a lot of us too. There's thousands of emerging funds. So again, there's public databases now. You can even find them searchable on Twitter to where you can find hundreds and hundreds of VCs. I think like one of my favorite follows, this guy named Shai, Shai Goldman from Brex. Like he maintains a list of like over 500 emerging manager VCs as well, all like under $50 million funds, I think, or 100 million or something like that, or 200, something like that, some decent threshold. And very well documented. So you can even do little like pivot tables or searching of just like, oh, okay, they're at least investing in this sector at this stage. But the later that you go, it's a little bit less about emerging managers. Typically, it's going to be like a bigger fund at that point, and there are fewer of them, and they're very established.
Yeah, for sure. I'd say Open VC is doing a pretty good job at this too.
Yeah, Open is great for sure. Yeah,
for sure. I think I'll pivot here a little bit, based upon the same premise that when you reach out to investors in general, what does the human behind the VC firm really what is he or she expecting?
Well, I'm just processing that question. It's interesting. So I like the fact that you mentioned human, because it's very easy to like for founders especially, and I was one of those founders too, to think that like VCs think like a monolith, right? But it's also easy to forget that the VCs are humans too, right? So Elizabeth, myself, Sheehan, we all have young kids. We're all very involved in like different aspects of our life too. Everyone, including founders, the VCs have a different kind of struggle that they're always going through. Sick parents, all that stuff, right? And in terms of expectations, I think like there's a few things that I tried to set. I have a social contract that I have with our founders, actually, in terms of how we engage together. And I'm happy to share that with you. So there's 3 parts to our social contract at Hustle Fund. And we typically say this at the very beginning of our engagement with a new founder, which is part 1 is I'm going to commit to blunt honesty and direct feedback, but please assume that it comes from a good place in my heart. So it's very easy when you're a founder talking to VC feeling like, oh my gosh, like I got to like be really careful with this relationship and talking a certain way. I want to sort of just put all that aside. And when I have feedback, it's going to be as direct as possible. I'm just going to jump right into it. But I also want the founders to reciprocate too and give me direct feedback too. Like if I'm asking a dumb question, I should be asked, like, why are you asking such a dumb question? Like it's fair feedback, right? But I assume it's coming from a good place in your heart because we all want the same thing, which is to be successful with this company. So part 1 is direct feedback. Part 2 is whenever we meet as a founder, I tell the founders, like, whenever we meet, I'm going to assume that things are going badly. And it's not to say that like I think the founder is bad or the company is bad or anything else is necessarily bad. It's just like when I was a founder myself for many years before Hustle Fund, 95% of the time it felt terrible. It's like, a lot of like psychological imposter syndrome, a single client that if I'd lost that client, like it could like destroy the business, an employee suing me, something like that. It just felt like so many landmines on this field that you're trying to cross. But so I always want to get right into problem solving mode, right? Of just like, what's the biggest problem that you have, your biggest blocker, and let's figure out how to unblock it. That's how I kind of structure my meetings with founders. But I will say that even though 95% of the time it feels terrible being a founder, 5% of the times it feels like heaven, right? I've never felt so much joy from work than in being a startup founder in those 5% moments. And I've worked at great companies too, like Facebook and Instagram. It was nice, but I never felt joy there, right? And I think that's kind of what makes being a startup founder so addictive is like you get to feel that joy, even if it's rare. So direct honesty is part 1. assuming things are going badly, whenever we meet is part 2. And the last part that I share with founders is, sounds weird, but I say you have permission to lose all of our money. And the reason why I say this is not because I think that this is a founding team that is going to lose money for us. We invested for a reason. But so long as they kept things transparent and honest, and then they did their best, but it still didn't work, and that happens more than it does work, then that's okay. That founder, if they're really good but just worked on the wrong problem and tried, should just try again, and then I'll be back for them. And if that doesn't work, that's okay. We'll try it again, because eventually a winner's going to win, right? It may not be the first company, it could be the third company, fourth, who knows? But a winner will win. So that's the expectation I set with our founders, that 3 parts: honesty, assuming things are going badly, and it's okay to lose our money. And what I find is that it creates a really transparent and vulnerable relationship with founders for those that really sign up for this kind of thing. And that in itself is also like a really big source of joy for me, to have that kind of level of relationship.
That's incredible. And I think we'll take a hard stop there. We talked a lot about things. I hope that was fun for you. I mean, I learned a lot of things. I try to create even when I have VCs on, I try to create an environment so that it does not feel like it's like the same old boring VC podcast kind of thing. So I hope I could create that this time too. And one question that I end with: I've been into startups and VCs since I was 11. What do you think is one fact that would blow 11-year-old me mind?
About venture capital?
Anything.
Oh, just about anything in life? Oh, okay. Here it is, 11-year-old Advik. 95% of your happiness will be dictated by whom you choose to marry. And almost everything else is just nice icing on the cake. I was lucky. I got to meet my wife 20 years ago in college. So I've been with her for 20 years. We've been married for 14. And I got to say that even if I didn't have this job, even if I had to, work as a clown in the circus or something else, I work as a barista in Starbucks, which actually does sound kind of fun sometimes. It doesn't matter, right? Like, I have her, I have this amazing family because of her. And that's 95% of the happiness. So if I had to stop here in this career at this moment and just like accept that, I would be more than happy. So choose your partner really well. Find someone that actually makes you more motivated to succeed, makes you dream 10, 100 times bigger than you think that you can dream yourself. And it has great values and also great parents, great family. And you're going to be great. I mean, it doesn't matter what you do in the rest of this life. You're going to have a really great and satisfying life.
Oh, yeah, definitely. That blue 15-year yeah, that blue 15-year will be mine, and that's too much for me to think about right now. I think that's it from my side. Anything you'd like to say?
No, Advik, I just want to say thank you so much for the opportunity to speak like this. Congratulations on being already such a talented interviewer. And I think you have a really huge future ahead of you as a true hustler who's building, I think, something amazing and a big network around you too. So excited to keep following along and grateful for the chance to speak with you today.